Hello and welcome to the Silicon Alley Podcast. I'm William Glass, CEO and co-founder of Ostrich, and of course, your host of Silicon Alley. And today, I sit down with Tristan Pelloux. He is the founder of the Fintech Review, a website, blog, email newsletter that shares all things fintech, what's going on in the space, and where to get started if you're interested in financial technology. In today's episode, we define what is fintech, diving deep into the landscape and sort of progression of what's happened in the fintech space and where it's headed, as well as how startups and corporations can come together to create meaningful partnerships that last a long time. And lastly, Tristan shares his own experience with personal finance, some of sage advice that he got from his father as a kid, and his best and worst investments. If you haven't already, go ahead and pound that subscribe button so you get notified when episodes air every Friday. And without further ado, I hope you enjoyed today's fintech-focused episode of the Silicon Alley Podcast.
You got no time to waste, but still you hesitate. Caught in a circle saying, I'll never leave this place. Some words got you searching for the...
Tristan, welcome to the Silicon Alley Podcast. Super excited to have you on today.
Hi, thanks for having me.
Absolutely, yeah, and excited to dive in. You obviously are very deep into fintech, and so definitely want to talk a lot about that. You split time between a couple of different countries. Can you talk to me about what that's been like during the pandemic?
Yeah, sure. So I used to live and work in London. This was before the pandemic. I was there for 6 years. I moved there as a young intern in 2015, and fast forward 2020. After a few years in working in corporate strategy in banking, I decided that I should live somewhere where there's a bit more sun, the food is better, there's a beach. So here I am in Barcelona. But as you mentioned, I created a business that is in London. So going forward, I plan to be a bit more in London and a bit here, but right now I'm just here.
Yeah, enjoy the beach. I like that. I like that decision. That sounds like a good decision that you made.
Yeah, exactly. You know, after a few years in London, which is a really great city, you just feel that you should have more sun on a day-to-day basis. And being from the south of France, where um, the sun is something normal and the beach is something normal, yeah, after a few years, you just feel like you should be closer to home for me, but also closer to the sea, closer to in a nicer environment. And especially these days, you just realize that you can do your job from about anywhere. If you need to meet people, you can meet people. You can hop on a plane, and everything is quite close. We're 2 hour flight from London, so everything is doable. And I think with the pandemic, a lot of people have also realized that a lot of meetings, face-to-face meetings, were useless, and you could do them over a Zoom call. So I think this will be a game changer across most industries.
Yeah, no, I think you're spot on there. Definitely, we've learned a lot, I think, as a work culture in terms of what you can still accomplish through primarily Zoom meetings or, video conference calls. So I want to start off, Tristan, you alluded to it, but your experience getting into retail banking. So talk to me a little bit about that and how specifically it really hinged on you getting a beer after that interview. Can you talk a little bit about how that story plays into how you ended up in this space?
Yeah, sure. So as I said, my first 6 months in London, I was an intern in M&A. So living the life of an intern in M&A, which wasn't great, but for me, out of business school, I felt like going into investment banking was the right thing to do, and most of my friends were doing that and going to process. And I did a few interviews, and I thought this was what I was going to do. And then I saw an ad for a job in corporate development at what used to be the UK subsidiary of National Australia Bank. And it kind of, I thought, oh, you know what, I should go for the interview because it sounds interesting. So I went to the interview, like longish interview, 3 hours, Excel modeling and all that good jazz to see if I could do the job. And at the end of the interview, the guys asked me, "Do you want to go grab a beer at the corner?" And I thought, is this a test, or what happens if I say yes? What happens if I say no? So, well, I thought, I could do a beer anyway. So I went for a beer. Well, actually, probably a couple or more. And yeah, the next day they called me and they said, "You've got the job." And afterwards, they told me, "Well, actually, yeah, it was part of the recruitment process to see if you're good to work with, because at the end of the day, you spend a lot of time out with your colleagues. So you better get along." And they wanted to know if we could have a chat about other things than work, and what were my hobbies, and yeah, just if they could be with me 10, 12 hours a day. Or so yeah, that's how I got into retail banking, which back then everybody was saying it's a boring industry. You shouldn't go in there. But this was 2015. Fintech was there, but it wasn't so trendy. And fast forward 6 years, and we've seen tremendous changes in the industry, and it's definitely not a boring one.
Yeah, no, I like that you shared that story, because I think you hear like cultural fit, and it's something that at least you hear a lot about making sure that you hire for culture, and I just think that's a very like London banking like great story, and obviously you passed the test and are a good human being outside of just being able to do Excel modeling. So Tristan, so talk to me about, as you said, retail banking wasn't the sexy kind of area of finance to go into, right? It wasn't investment banking, and where kind of the myth or high rollers go to, so to speak, right? Like when you think about like cultural nuances and how we think about investment banking. So talk to me about your experience in retail banking, and as you said, the development of fintech that started to get your interest into this industry.
Yeah, so I was working for this bank. Australian bank wanted to get out of the UK. So my first 6 months I worked on the merger and IPO of this bank, called, back then it was called CYBG. A couple of years later, acquired another bank called Virgin Money, and now it's all rebranded Virgin Money. And whilst I was there, I worked on a few things, corporate strategy, a few M&A deals, and my last job was to develop strategic partnerships with fintech startups and technology companies. So, but I have been interested in fintech for a while, and I have worked on many projects in the space. So I was looking at how the industry was going, broad sense. So how financial services are evolving, how new entrants are changing things or not, and because that's key when you're working on the strategy of a bank. You have to look at the competition broadly. So the other banks, obviously, but then also like new entrants and others that might enter your market. So that's the typical strategy thing. And the industry has changed a lot because post financial crisis, basically the fintech said, we're going to go for the low hanging fruits, which are payments, and then they went after it. Well, it wasn't too hard because banks were super bad at it. So they went for that, and then at some point, where do you go from there? Well, you go for retail because it's also relatively easy. So that's how we've started to see more and more neobanks coming in, and this is really what has shaken the industry. That's pushed incumbents to develop better digital offering, and after that, we've seen more and more activity in the business segment because it's a bit more complicated. So it's kind of, it goes from which is logical. You go for the very simple things, then a bit harder, then you go for when segments start to be crowded with companies, even though you still have a lot of neobanks launching all the time, which is, it's a bit nuts, but it is what it is. But yeah, I think it went from a very boring industry where you go to your branch to open an account, your app is terrible, the website is terrible, everything is terrible, the customer experience is just awful, to new entrants. Obviously, banks had to level up somehow. Still, they still don't have the best stuff. But when you look back 5 years ago and what you have now, it has improved. So anyway, that's the evolution of retail banking.
Yeah, no, that's really interesting, Tristan. And you've kind of touched on it without touching on it. But if you were to define fintech, so someone that's not really that familiar with this space, or if you're trying to simply describe it, like what is fintech?
Yeah, so I take a very broad view on what fintech is. For me, it's innovation in financial services, but in a broad sense. So ATM, is fintech, or any kind of innovation. It's basically it's financial technology, and we all know that. But an ATM, for instance, is financial technology. So what I'm interested in is that I look at everything that is going on. So in finance, in technology, but also in business and economics, because definitely for me, you put everything in a box, you shake it, and this is what fintech is. It's everything that is happening. So it can be startups, but it can be also incumbents doing stuff. It can be technology companies trying to enter the market, change things in financial services. So it's a lot of stuff, and it's just because I'm quite interested in innovation, but really from the point of view that it's solving for a need. It's not just innovation for the sake of innovation, which is nice sometimes, just to show that you can do something, but it needs to have a purpose, and the purpose needs to be that it's better than what you have. Like, it's, for instance, if you're saying you're innovating and you have a new product, cool. Is it better than what is on the market? Is it solving for people's needs? Do they want it? Are you sure they want it? This kind of stuff. But yeah, I think I think there are various ways to look at fintech. But I guess my background, coming from a finance and economics background, I like to have a broad view. Rather than go narrow into just the technology, or just saying that, oh no, it's only startups that have emerged the past 10 years, otherwise you're not in fintech.
Yeah, no, thanks for explaining that, because I think that everyone kind of has their own, where fintech ends and begins is a little different depending on your perspective. So I appreciate you framing that. Going into retail banking, starting to develop an interest for fintech, you mentioned that you're not interested just in the technology or just the financial services or just the business implication, but really where those intersect. Where did that interest for all three come from? And how do you view like fintech from that lens versus someone that might just look at it from a technology perspective?
Yeah, so the thing is, I was in the corporate strategy team. So in what you do is that you work on the strategic planning, where you also work on strategic projects. And for me, I saw that to really understand what's going on in the industry at a strategic level, I needed to understand a bit better what was going on in terms of technology.
Mm-hmm.
So I started being more interested in changes in terms of technology, because the way I look at technology as well is that it's from a business perspective. Is that why do you use this platform? Why do you use this technology? Okay, you want to use AI, cool. To do what? And why would you use it? Is it going to cost you more than having a normal system? Does it have any benefits? So I've started looking at technology from that perspective, and that's where I started looking more into fintech. But it was always from the point of view of how is this impacting our strategy?
Mm-hmm.
Was the new entrants? How are they doing things differently than us? And uh, should we follow? Should we not? So it was a lot of competitive analysis and trying to understand where the industry was going. If you see a number of your competitors adopting a technology, maybe you should as well. Maybe you shouldn't. 2016, when I looked at blockchain, because there was a lot of hype and everybody was doing a POC. And should we do a POC? Should we not? And you look at it and you're like, well, maybe we shouldn't. And a couple of years later, nothing has come out, or barely nothing has come out of this POC. So it's about trying to understand where the market is going and weighing the facts. So yeah, I guess my lens is always that one, which is trying to understand also the business models, innovation in the sense of a new business model, a new product, which doesn't happen often in financial services. To be honest, it's always a lot of marketing glitter and very rarely something very new. But I always look at it from that perspective as well. Is that are the business economics going to work? If you're going into a very niche part of retail banking, for instance, there's no money. So what are you going to do with your product? So that's where I'm interested. It's trying to understand these dynamics, trying to take a step back, look at the broad picture, and then narrow down sometimes into specific things to try to understand how it can impact the broader picture.
Yeah. No, Tristan, that makes a lot of sense. And when you were saying POC, in case people miss that just stands for proof of concept. So people that wanted to try out blockchain and just see if it would be a test case. I'm curious in terms of thinking about, and I'll delineate it from like institute, as you said. I know you define fintech as being coming from any sort of player, but the traditional sort of thought process is startups, and you've got your institutions, your large banks and financial service providers. How do those two work together, right? Because you see a lot of times where they do blend well together. So how do you think about like financial services companies and fintech startups partnering together, and from your experience on the corporate side and just how you look at the space?
Yeah, so I focused a lot of my efforts on trying to make this happen, because I think for a while banks thought that they didn't need to work with these new guys, and there was no point. Eventually all these startups would die and the banks would prevail. Kind of, this was the approach for a while. Then at some point they realized, well, actually, maybe there is a way for us to work with them, and the sense that you get value. Like the point is that if someone is doing something and they focus all their efforts on doing it, chances are they're going to be good at it. So for certain parts of your business, going for a strategic partnership makes sense, because you're like, okay, if I work with them, then they'll provide this bit. It can be technology, it can be part like a new product that you don't have and you just want to plug into it. And I mean, a lot of banks, including the one where I was working, kind of realized, okay, we should, instead of looking at every time, we should build it. We can build it ourselves, or we buy it from whatever vendor is coming to sell it to us. Okay, there is another alternative, which is you partner with someone. So it's easiest, easiest said than done because it's hard. But it's because any kind of joint venture or a strategic alliance is hard. It's not just because it's a fintech and you're a bank. It's just like it's hard because you're trying to combine two companies into doing something. Then you have obviously different kind of partnerships. It's either another way to call it a vendor, which happens a lot, is like, let's do a partnership. Yeah, you're just selling me something. But a true partnership where each side is trying to put like the resources to build something together and all that. It's very hard because you have two cultures, especially a small company and a big company. Two cultures are colliding, two ways of doing things. You have on one side a waterfall, very slow. Decision making is just a mess because it needs to go to 100 committees and all that. And on the other side, you have like, let's do things, let's be agile and all that. And I mean, the reason banks have all these processes in place is for a reason, is that they have millions of customers. If something goes wrong, the regulator is turning and it's like, what have you done? They're not going to go after the three guys in their flats like, well, we didn't know it was the bank's problem. So that's why banks are super slow and on the other side. So what I've seen is that there is often misalignment from the beginning on the expectation that this is going to be a 2 weeks job. But yeah, no, I mean, when it works beautifully. It's just, it's very hard work to make it work. But I've seen successful things. I've seen things, burst into flames. So
what are those?
I mean,
what are some examples of successful, successful partnerships? Like thinking about what are some of those key things. It sounds like you alluded to, alignment in terms of the purpose, but what are some of those things that lead to successful partnerships versus the big flame fire up failures?
Yeah, I think that first you need, as you say, you need alignment on both sides on the objectives and the timing and what's going to be required from both sides to make it work. Then you need a strong will. So basically, both sides need to be really damn sure that they want to do it. And when I say strong will from the top. So you need all the execs you can get, and if the higher the better. So if both CEOs want it to work, it's going to work. So that and then also you need a good idea in the sense that it needs to stand on its 2 feet. It needs to be a good idea. It needs to solve a problem. As I said, it can't be just we want to work because we want to work together. And I guess when so basically you have a product market fit. So you have a product market fit. Both sides want to work together. Good alignment. And then it works. I guess it's not magical. It's just you put lots of resources into and strong will to make it work. It's a bit like a marriage. Is that if both sides want to make it work, it's working. If not, well, then you end up in a divorce. And so it's literally that. And from the beginning, it's the same thing. You need to talk about everything. You need to work things out before you get in front of the priest, because then otherwise you'll need to solve these problems at some point. So that's why it takes time, because if you want to do a very comprehensive strategic partnership, then you will need to work out everything from commercial to technological to governance to everything that is how you're gonna run the thing. And yeah, it takes a bit of time, but then yeah, if it works for everybody, and you can really leverage both sides, like the strong suits of both sides.
Yeah, no, that makes a lot of sense. And getting the alignment from as you said, the CEOs or the executives, as many executives on board, and having that common purpose, I think makes a lot of sense in terms of being able to build a strong partnership. What are you seeing in the fintech space? Like, what are some of the things that you're seeing that you're excited about? Just in general, what's going on that people should pay attention to?
Obviously, pay attention to what's going on in the crypto space, just because there's so much going on at the moment. So I mean, you can't just ignore it. However, I mean, I'm looking at various stuff. I think that the SPAC wave is quite interesting. What's the name? The special
Purpose acquisition
companies?
Yeah, corporations.
Yeah. Sorry, I forgot that. So I'm looking at SPACs. I think it's an interesting space, especially because it's, for me, this is financial innovation, in the sense that you create. It's not something new, actually. It's been around for a while, but you kind of look at it and you're like, okay, the IPO process is a bit broken. So let's look at something else to try to get a company to the stock market. So I find it very interesting, and obviously look at that phase, crypto, and more broadly anything that is happening in retail, business banking, mostly in Europe and the US. And yeah, a lot is happening. A lot of money is going into everything in fintech at the moment, because there is still the belief that incumbents are not good at a range of stuff, and which is good. I mean, it's good to challenge them, because then they also invest, and it's good for everybody. I think though that not all the startups are going to survive, and not all banks are going to survive. It's just like overall there are already too many players, and yeah, in most segments, not all the segments, but in most segments. So I'm quite interested in looking at the business economics of some of these segments. So as I was saying, I think retail, everything that is retail focused, I find it hard to see where the value is going to come from, because it's limited when you go after the retail. Either you're gonna make them pay some fees, or you have to lend. And if you don't do any of these, then it's becoming harder. You do referrals, but there needs to be a way. And yeah, I do find it interesting because a lot of companies are building their assumptions on the lifetime value of a customer, that you already have 20 companies that are after that customer. So not everybody can get the lifetime value, and not everybody can get the same pool of revenue. So, and especially the broader economics, wages are not going up that much. So you're like, well, okay, so people can't spend that much on financial services. So yeah, no, so that's why, what I was saying, my lens tends to be around economics and strategy, to try to understand the dynamics that are happening. And like what I was saying, a lot of money is going into fintech from VCs, and these VCs at some point they want to cash out. So at some point they will say, well, guys, that was good and fun, but why don't you make a bit of money, please? Or they try to sell it, but banks are quite bad at integrating acquisitions. So can they buy them? Not really, with the valuation that they have now. some fintechs are bigger than them. So what would you do? You can't buy a smaller business for more than you, and maybe they don't want your shares as well, because you're like you go to a fintech startup and you're like, oh, why don't you take billion in my shares that have collapsed by 80% in the past 3 years? No, thank you, I don't want it. So anyway,
Yeah,
a lot
that's
of things.
interesting. Yeah, that's really interesting, Tristan, that you bring up around the valuations, right? Like we kind of see this with Tesla in the auto space, right? They're like one of the biggest car companies, yet they produce like the least amount of cars of all the large incumbent car makers, right? Because they've got the technology and the appeal, and you see that with some of these fintech companies versus a traditional bank being valued at how you would traditionally value a bank versus a tech startup. So that's really interesting. I don't know if you're seeing this as well, but there seems to be a lot of corporate VCs from the banks now that are also trying to at least get stakes in potential companies so that maybe they can acquire them or they can have some sort of leverage to integrate in the future. Like, what are your thoughts around like the corporate VC arm in the fintech space?
We see a lot of activity in that space. For instance, BBVA made a killing on the Coinbase IPO because they had invested quite early stage, and can't remember, but I think they make a good profit in the hundreds of millions. So yeah, I think that corporate VC is a good idea. It's the next stage when you look at strategic partnerships. It's basically you look at, okay, we're going to do a smallish thing. Then you're like, okay, let's do a joint venture and put a bit more into it. Mm-hmm. And then you have another way, which is let's invest in a company, but it needs to be, it can't be, the view from a corporate VC is obviously different from a traditional VC. That the view is to maybe gain early access to a product or a service, to some skills, maybe to try to develop, as I said, like a partnership, but maybe exclusive. So you try to access something. That's why you invest in the company. So it's less so about the financial return, a bit more about the strategic fit. So it's a bit, you need to be a bit more careful in terms of it can't be the same way as you make a tons of bets and hopefully one will be fine. It's more about, okay, which ones I think are going to be a good strategic fit for me, and let's go. I'll invest a bit into all of them, but you need a process afterwards to kind of leverage this connection. Otherwise you're more like a normal VC, but you need a strong process to leverage this connections, trying to develop things with this startups. Maybe it's a way for you to actually acquire them a bit later on, or maybe you see synergies within your portfolio because you think that you have two fintechs here, you as a bank, you can connect them through you, and there can be value for everybody. So there are various options. You obviously need to be big enough as a bank to allocate some capital to do that, and it's particularly hard when you're hit that much by the market, which doesn't believe in you. So it's a bit challenging from that perspective. But if you're big enough and you have the money, why not? It's another way for you to gain access to early stage startups.
Yeah, makes a lot of sense, Tristan, in thinking about how the corporate VC looks at things differently than just a traditional VC would in this space. Obviously different outcomes, different ability to make a number of bets, and just different business model. Talk to me a little bit about how you started the FinTech review, right? So we kind of touched on it. You started to get interested in as you were in the retail banking space and the strategic partnerships, but when did you start the business?
So So as I said, yeah, I was at Virgin Money, and I was working a lot in space and looking at what's happening, and I was sharing my thoughts with my colleagues, and then I started sharing my thoughts with more colleagues and more people in the bank. And at some point, I just realized that maybe I should share my thoughts with more people than just internally. And I started personal blogs that I thought I would just write here and there. And last year, when I left London, I decided that it was maybe time to try to spend more time writing, but also try to see if this could be something. And this started out of it's well, coming from a strategy background, it's not a great way to approach market because didn't do my homework on product market fit. I started from I like to do this, so I'll do it, which is not something I would recommend. But anyway, I started writing more, and then I started doing interviews, and now I'm developing it into something more of an independent media. And the way I try to differentiate from the rest is that I take very strong opinion about stuff, because for me, I mean, you need to. It's just like just I'm kind of person where I would say cut the crap. Tell me what it is. So that's what I do. I call things and I try to connect the dots between stuff, which is what I was doing. This was my job in strategy, to connect the dots, to try to see where the industry is going, why it's going, who is doing what, and why is they're doing it, and what is interesting, what is noteworthy. So that's what I'm trying to do. And so I continue to write analysis, but I also like to interview people in the industry to get their thoughts. So that on specific topics, I can get, I can pick people's brain and ask them, okay, what's the job market like? What's happening in behavioral economics and fintech? So I try to. That's when I started to do interviews, and yeah, I'm starting to develop it, and I continue to scale it. But yeah, it started as a good way for me to express myself, and I continue to do so through FinTech Review. But I also try to let other people express themselves. But yeah, I think I see where it will lead me. But the idea behind it was that I really liked it. I really liked the space. So I thought naively, I was like the classical thing, which is the classic thing, which is that do something you love and you never work a day in your life. And well, you end up working 15 hours a day and you don't see it, but it's still better than just doing something that's you don't like or you don't want to do, and you're waking up in the morning and you're like, oh no, God. So I'll wake up in the morning, I'm like, oh yeah, what's gonna happen? And I read stuff and I write stuff, and I find it fascinating.
That's awesome. Yeah, no, I like that story and sharing kind of how you just turned a personal interest that people were gravitating toward. People wanted this information and turning it into the FinTech Review. What are some of the challenges that you faced building up?
Well, I mean, obviously, it's a niche market, as that it's you end up spending so much time in it that you feel like it's a huge market and it's gigantic and everybody cares about it. But actually, it's not the case. That you have a limited number in the end. I mean, it's still a big number, but a limited number of people that actually care about it. I mean, care enough to read stuff, to be interested in engaging with the content. So it's I mean, it's a challenge to develop a media. I mean, it has always been, maybe more lately. But actually, these days you have lots of tools to build everything you need. I was also keen to do everything myself because I wanted to learn. So, but I mean, it's super easy to develop a blog, develop a media. There are so many tools, so many platforms. You just need to. I mean, the challenge is just um, to manage yourself and manage your time and try to not be going in too many directions. And I mean, and then the challenge of being a solo entrepreneur is quite, it's quite complicated, especially because when I don't do that, I do strategy consulting. So I'm trying to balance my time between these two things, and it's quite challenging sometimes. So you end up doing a lot of hours, and you also end up not disconnecting too much. So you end up waking up on the weekend, and first thing you do is that you turn on your computer, which is not great. But that's also the challenge when you do something you love, is that you don't know where it ends. And before, I mean, even when I was not doing that, when I was working as a, oh, what will I do to just chill? Oh, why don't I read this report about fintech from Capgemini? And you're like, well, okay, but this is not disconnecting. So that's the problem when you really like what you're doing, is that everything is work, which is great, but it's not great at the same time. So I'm working on it. I'm trying to impose myself some mandatory breaks where, I don't know, I go cycling, I go do something else, but not to work myself to death. But it's hard when you like what you're doing.
Yeah. No, I think that's a challenge that entrepreneurs face when they really enjoy their work, as you said, right? It's figuring out how to balance everything else with it, right? So that you don't end up having it consume you and burning out. But if it's something that you truly love, how do you balance all the other priorities in your life as well? Tristan,
Yeah.
in terms of the future and kind of vision for the FinTech Review, what does that look like? What does success look like?
I think, for me, success looks like I can spend much more time on it. Like, from the sense that it generates revenues, so I can spend more time on it, which at the moment is not the case. So, but I think that for me, the success is not, 1 million readers a month, because it will never be the case. It's not TechCrunch. It's a niche media, and I also don't want to compromise editorial line, in the sense that I'll still call things as I see them, and I don't want to change that, because this is what I enjoy. So, which means that it will always be okay for some people, but not for others. So, but yeah, I think for me, success is that it has developed into a significant-ish independent media in the space, that people go and read interesting stuff, and yeah, I mean, for me, as long as I could get good feedback, it's great, and as long as people are interested in what I write, or the people I interview. So yeah, I mean, it's for me, it will remain. I don't see in 5 years an office with 30 people working on it. But I do see in a few years me spending more time on it, and that it's it stands on its 2 feet, and that it's been successful in the sense that the audience is here, it's recurring people that really like it. And yeah, I don't know. That's my vision. But my vision also is that it's even broader than it is now. So that you
Okay.
have online courses, you have more reports are published. But for that you need a bit more time to dedicate to it. But yeah, I'll get there, I guess. As I said, for me, I don't see it as I don't even see it as building a business. I see it as doing something I like. So if 5 years from now I'm still doing it, I'm like, yeah, sure, well, why not? Like, I
That's
would love it.
success.
Uh,
Yeah.
I
I
just
like
need to
that.
build it into something that is sustainable, so that it's actually the case. But even if it's not sustainable, there's no way I'm shutting it down. I'm like, no, I'll do something like, I'll go flip burgers at Five Guys, 500 meters from my house, and I'll continue fintech. That's what I do, but I won't shut it down.
Yeah, that's commitment right there. That's commitment. So no, I love that. And, figuring out what success looks like for you and versus someone else or whatever preconceived definition. So I like that you've thought about that. Tristan, I want to talk a little bit about personal finance as well. So I'd love it if you could describe your relationship with money.
So I would describe myself as a hoarder, and I have a frugal style of living. So um, I guess I mean, my dad always told me, whatever you earn, you need to save half of it. So, I mean, I grew up, he told me that all the time. So when I started working, I had this mindset that, this is what I need to do. And the thing is, as I was earning more and more over the years, I never really increased my lifestyle, which means that I saved more over the years. And I don't know. I always thought I need to stash a bit so that it will be handy at some point, like, for rainy days kind of things. And it has proven useful because obviously doing a launching like this, so, I'm going to be an entrepreneur and nothing is certain. Where I was able to do it because I had this mindset for years, and I was able to save enough to be able to do that kind of move. So yeah, I've always been, I wouldn't say stressed about spending money, but kind of always focused on saving and investing money, just so that I guess I was never thinking one about financial independence, but it was more around the fact that I wanted at some point that I won't work for the money, because I will still work and earn money because I need to, but it's not the reason why you work, and it's not the main reason why you would look for a job, for instance. But this was before I thought about being an entrepreneur. I thought at some point in my life when I change job, it shouldn't be about oh, I want to earn more, or I need that, or I need this. So to try to build this safety takes time and commitment. But I guess it's more it's really a mindset in terms of are you going to spend everything you earn, or do you have a specific goal or not? So it can be, you don't have to have a goal. It can be just I need that much money, saved. So then after that, I'll be relaxed, kind of thing.
Yeah. No, I like that. I think that makes a lot of sense. And the fact that your dad told you to to save half of your income is much more than the average person for sure. So it definitely affords you the opportunity so that you can spend time working on the fintech review and things that you care about. So I love that. Tristan, in terms of the best investment you've made, what would you say that is?
So I have a couple of investments that I'm thinking of. I invested in oil last year, when it went negative. and I was like, there is no way that oil will stay at that level. So it was even before it went negative, when it was about a bit. So I did it twice actually. I did the same trade in 2016, and I did it again so last year, which is to buy ETFs on oil, and no intention to keep it. It's just like you look
Yeah.
at the market, you're like, okay, fine. The market is pricing the barrel at $20. It makes no sense. Everybody's going bust at that price, so it's gonna normalize. How long it takes, who knows? But obviously, I mean, so last year I made 100% in a couple of months. So
Nice.
the only regret is that I didn't put more, but that's the classic one. And in 2016 was a bit less, but last year was just crazy because the markets were completely irrational. So I was like, you know what, I'll just step in, put a few grand and see where it goes. So it was a good one.
Nice.
And then a bit more boring and a bit more long term, but I bought a flat in Marseille below the market, by to rent it out, and this ended up being I think it will be a great investment. It's already a good investment because it's below the market, good yield. But yeah, I guess it's more boring. So I do both stuff. I do like crazy ETFs ride on a couple of months, and I do like more boring just to balance. I mean, I've studied finance, and I look at my investments in a very boring portfolio management way. So I'm like, okay, I need 5% in venture capital. I need a bit in commodities. I need a bit in real estate. And this is how I look at my portfolio. And I allocate, and also like, in equities, I'll look at everything, and I'm like, okay, I need a bit of exposure in the US, China, whatever. And this is where I diversify, because this is how you limit risk. And so that's a good thing when you study finance, is that you should be able to do that stuff, because that's why you've studied. Or otherwise you go work in portfolio management, but even if you don't, you should be able to manage your money. And I also like it. I wouldn't pay someone to do it for me.
No. Yeah, I like that. And I'm glad you brought up both examples, right? I think it's easy to get caught up in the equity trade or whatever or even when you think about like crypto people that got lucky, or just not, maybe they knew more, maybe they didn't get lucky, but those ones that go way up. But also thinking about, I'm sure there's also probably advantages to the Marseille flat and being able to have that real estate exposure as well. So in terms of the other side of the coin, I'm sure you don't always make fantastic decisions. What would you say is the dumbest money mistake that you've made?
If I have to think, well, dumbest mistake is probably not to have bought Bitcoin first time I came across Bitcoin in 2010. So this is probably the dumbest mistake, because obviously, I don't know. When I looked at it, it was in the low tens kind of thing. So even if I had put 100, would be a lot of money now.
Yeah.
So this was particularly stupid. However, back then I was studying business and finance, and I was looking at it in a very rational kind of economics way, which is, okay, the intrinsic value of this thing is 0. So even at 10, it's going to go to 0. That's the problem, right? Is that I was looking at it from, how I would have known that there would be a hype, and then all the institutional investors, and a pandemic where quantitative easing goes like full on, and then equities, and then who knows, and boom. So this was quite a mistake. So I should have invested that. And also, I guess for for a few years, I kept too much cash. So this wasn't very optimized. And when you look at inflation, and for like 5 years, I kept way too much cash. This was probably now 10 years ago. I kept too much cash. I should have invested it. And for sure, I would have, in the meantime, I would have doubled my money. And in the end, I've lost because inflation kind of eaten away has eaten away my savings. So yeah, I think, I mean, this is just the mindset of, you have cash, and if you need the money, you shouldn't invest in equity, for instance. But at the same time, by doing nothing, you kind of lose money anyway. So it's just like, this risk taking. I should have been a bit more on the risk side on that one. But yeah, I mean, the Bitcoin trade, it's kind of, I guess everybody is doing that. It's like, oh yeah, what if I had bought Amazon in 2000 or whatever? Yeah, well, I was 10. I wasn't going to buy it. But I think for Bitcoin as well, I mean, I could have, but you put me exactly in my shoes back then, I mean, I still would take the same decision. So there's no, it's a regret, but not really a regret, because I know I would make the same decision back then.
Yeah. No, that's a good way of thinking about it. Yeah. So those are good mistakes. Well, Tristan, I appreciate you sitting down. In terms of last word, I want to leave you with the last word, anything you want to leave the audience with. And then also, please let folks know where they can learn more about you and where to go to get the FinTech review.
Yeah, sure. I mean, that was going to be my last words. Well, first, thank you for having me. As you can see, I can talk about FinTech for a very long time, or business or economics. I just can talk about my dad is calling me the radio when we're in the car, so yeah, that's what I do. And I mean, if people are interested in strong opinions about stuff and engaging with me on FinTech, I'm always keen to do that. I'm absolutely everywhere: Twitter, Facebook, LinkedIn, Instagram. You can find me about anywhere. And yeah, I'm always keen to talk to people in the space, to share point of views. Well, I'm particularly interested in people that don't have the same point of view as me, people that violently disagree with what I'm saying, because this is the best discussions, right? That someone telling me, no, Tristan, this is completely false. You're missing the point, because this I love. So if people think I'm full of it, then just talk to me, let me know, and let's have a chat about it, and let's just compare what we're thinking about the industry, about where FinTech is going, what is FinTech, and yeah, let's talk.
Perfect. I love that. Yeah. I feel like most people are trying to avoid confrontation and bring it on. Tell me where I'm wrong. Let's have a really good discussion. I love that. So,
yeah, that's the thing, is that I did boxing and MMA for a few years, so I'm not a confrontation away. I just love it.
Nice. Well, Tristan, thanks so much for sitting down. It was a lot of fun. I appreciate you coming on the show. That's it for the Silicon Alley podcast. If you haven't already, go ahead and share this episode with others, folks that are interested in finance and technology. They will appreciate you sharing this wisdom from Tristan. And of course, if you haven't already, go ahead and pound that subscribe button so you get notified when episodes air every Friday. I'm William Glass, CEO and co-founder of Ostrich, and of course, your host of Silicon Alley Podcast. Have a very profitable day.
You got no time to waste, but still you hesitate. Caught in a circle, say